If you have a business, one of the main goals that you should have at all times is to build business credit without a PG, right? You got to move to a space where you are constantly preserving your personal life, your personal assets. So trying to take the personal guarantee out of the equation is really important. So here are the few pro tips for you. But before we even start, there are some important facts you must know before starting to build your business credit without a personal guarantee. So how do you actually build it real fast? How do you actually do it? Well, you got to get your business in top legit shape. What I'm trying to say here is that if you're an LLC, make sure that you have all the important documentation that surround your LLC. Things like your articles of organization, things like your certificate of good standing. Okay, you want to have a business bank account. This is important. You want to make sure that you are able to have proper business banking references. Those are really important. Okay. By the way, welcome back to the show. It's really a pleasure to have you here. We're having a quick convo about how to build business credit without a PG. So what is business credit really used for? It's really important to understand that. So for businesses, credit is used for any purpose which requires the use of funds. So the thing is, the bottom line here is that you are able to get a service or product without shelling out cash beforehand or at the beginning. So you have trade and vendor credit. You can have a credit card, business credit cards. You have business loans. You have business lines of credit. You have other types of business financing. You have cash advance, merchant cash advances. You have invoice factoring, invoice financing. So you have what? You have a constellation of business credit programs that you can qualify only if you have excellent credit. I mean, at least more than average. And when we talk about business credit in general, business credit scores, particularly the PDES score, the minimum or the average, if you will, is 80. Okay. Anything below that, nobody's going to look at you. So, but if anything above that, people will start looking at you. Okay. This is important. So you're able to get business credit to run your business on a day-to-day basis, to grow your business, to enter into partnerships, to enter into long-term relationships, to get goods delivered to you, and so you can pay back after 30 days, after 40 days, after 50 days, after 60 days. This is really important. So this is holistically what you should know about business credit and why you should build it real fast. Now, let me give you the steps I want you to follow right now if you want to build business credit without a personal guarantee. Okay. Step number one, you need to incorporate your business. I've said this before, but you need to do this. And this is important because some sole proprietorships want to build business credit, but they have not done things legally. If you're a sole proprietorship and you don't want to incorporate, that's fine, but you need to have a DBA, a doing business as. But it's just a lot better to be a business, to be a legit business, okay? And as we always say, even if you are a one-person operation, it doesn't matter. You can still have a single-member LLC, okay? And you need to understand that the entity on which you are trying to build business credit must be separate from you. I want you right now to actually divorce your personal affairs from your business affairs. Okay, this is really important. And incorporating will mean some paperwork, and it will be inevitably sort of similar to, it will actually entail some fees, okay, of some sorts. So you want to check with your applicable Secretary of State's office for the details. And by the way, I want to quickly remind you of today's topic. We are having a conversation about how to build business credit without a personal guarantee. So when we talk about actually making things legit, incorporating your business, there are two main types of corporations. Okay, so you have the C corporation or S corporation. But if you don't want to have a corporation, you can have an LLP, you can have an LLC, you can have a limited liability company, you can have a limited liability partnership, you can have a limited liability, you can have an LP also. So you do have several types of companies you can have. Okay, so first thing, you want to incorporate your business. Number two, you need to get what we call a strong foundation. This is really important. You need to understand when we talk about foundation, it means what? To build business credit. In other words, to be able to get business to be funded, your business must be fundable. You need to work on your fundability profile. Okay, fundable in the eyes of lenders and the credit issuers And credit issuers means that your business has potential. Okay, they can actually give you cash, they can actually extend your credit. Okay, and you also need to make sure that your business and personal credit are separated, which means what? You need to actually initiate the process that will help you create a business credit score, and also make sure that you have an email address that has the same domain name as your website. For example, sweetiekiwi@sweetiekiwi.com. The third thing I want you to do here is to actually get all identification numbers. See, the thing is, when we talk about building business credit, there are a few metrics you need to pay attention to, and identification numbers are really important. Okay. And by the way, I want to quickly remind you of today's topic. What are we talking about here? We are still having a conversation about how to build business credit without a PG. Okay. So when I talk about getting all identification numbers, I'm speaking primarily of two things. I'm speaking about you having a DUNS number. So you want to go to Dun & Bradstreet, dnb.com, and you want to apply for a DUNS number. It's free. And you need to have that, because this is how you are going to build a paydex score. That's number one. Number two, you want to get your EIN. So EIN stands for Employer Identification Number. So this is kind of important, because if you are trying to take a PG out of the equation, you need to put something back in, and that thing is an EIN. Okay, so an EIN is very easy to get. Also, you can actually get it online. It takes about 10 to 15 minutes, 20 minutes top to actually get your EIN, and then the IRS will send you later on some kind of letter in the mail, and sort of make things official. Okay, but you can also apply manually. If you want to apply manually, not a problem. You need to fill out a form called SS4 and send it to the IRS. Step number 4, you need to get set up with the business credit reporting bureaus. Okay, so when we talk about you building business credit, it doesn't matter if you do all the work, but you are not, like, your data, your transactional activities are not being reported to the appropriate reporting agencies. So when it comes to business credit, there are 3 CRAs. It's kind of similar to personal credit. The only thing is the actors here are different. I mean, one actor is different. So business credit bureaus, you have 3. You have Dun & Bradstreet, you have Experian Business, and you have Equifax Business. And what I'm trying to say here is you need to get set up with them. Like, you need to set up an account with them. You need to contact each of them separately and get set up in their system. Step number 5, you need to keep business details similar everywhere. See, the thing is that a lot of small business owners make the mistake of having all the information all over the place, all their company's information all over the place. If you're trying to build business credit without a personal guarantee, remember, the business credit card issuer, the business lender, the net 30 vendor that you are going to contract with, they will do some research about you, right? They will investigate you. But if they start realizing that, you have names that are not consistent across the board, you have one name here, we have another name there, people get confused. And you don't want your partners to be confused, because confused partners are really bad for your business or for your chances of qualifying for business credit real fast. Okay, so business credit card issuers, lenders, and any other credit reporting agency will actually do research about you. So please. So whether you are talking about your company on your website, whether you are signing contracts, whether you are maintaining, let's say, social media profiles, use the same information, the same name, for example, the same address, the same email address, the same website. Okay, this kind of consistency will help you, and make sure again that the names are similar on any registration papers you have filed with the Secretary of State. Okay, anything that is official. Even say that, let's say when you file your tax returns, when you file your Form 1065 along with the schedules K1, when you file your Form 1120S, when you file your Form 1120 along with the respective schedules K1, make sure the names is similar, the names is consistent. This will help you a lot, and this will help you also make sure that there are no confusions and that you don't fall for any like, you're not a victim of identity theft. Because if your name is not consistent, your vendors or net 30, like your credit partners, will not know whether it's you or somebody pretending to be you, right? So be consistent across the board, and you want to also make sure that if there is any discrepancy, just make sure that you correct it, because you might actually delay or even lose a loan application or loan or line of credit application if the details are not the same. Okay, very important. Step number 6, and this is an important element here, you can apply for a starter credit. Okay, it can be a starter credit card or starter business loan. Okay, the thing here is that if you are trying to, let's say you're trying to build business credit, sometimes it's just better to start where you are already known. And what do I mean by that? I mean, start with the institution where they know you, like a bank or a credit union. And when we talk about banks, it could be a national bank such as Chase or Citi. It can be a regional bank such as a PNC or US Bank. It can be a local bank. Okay, it can even be a rural bank, like a bank that's like either in your city or in your township, for example. And the same advice applies for a credit union. So you can start with a national credit union, and you can go all the way to a state credit union. Okay, so you want to go to a branch and have a conversation with a loan rep and explain your situation and see what you can qualify for, and you'll be really surprised at what you could qualify for. Okay, and after that, so let's start a credit. Now, be ready to actually collateralize or not collateralize the loan. Okay, because we said that you're trying to build business credit without a personal guarantee. That's true. But you could collateralize a loan with business assets, not personal assets. So you don't have the personal guarantee part here, but you can collateralize a loan with business assets. Okay. And it's really important when you do that, make sure that the lender that you are getting the starter credit from, the lender that you're getting starter credit from, they are able to report your transactional data to all the 3 business credit bureaus. Because again, going back to what I said earlier, it doesn't really help or matter for them for that matter, right? It doesn't matter if you basically do all the work, but the fruit of that work is not being reported to Dun & Bradstreet, Equifax, or Experian. Okay, so apply for starter credit. Another way to apply for starter credit also is to go for a collateralized loan, like equipment financing, real estate loan, or yes, whatever, like accounts receivable financing, accounts receivable factoring. Those could be a great opportunity. Those could be great opportunities also. Step number 7. You need to actually be in a situation where you're monitoring your credit regularly. See, the whole thing is a lot of folks are actually trying to build business credit without a personal guarantee, but they do not monitor their credit regularly. If you don't monitor regularly, what will happen here is that you will never know what works. You will never know what doesn't work, and you'll not be in a position where you can replicate ad infinitum, ad eternum infinitum, what really works. Okay, let me give you an example. Let's say you started your payday score was around 75, and then after 3 months or 6 months, you are only at 81 or 82. Without looking at your credit score, your payday credit score, you wouldn't know exactly what's really keeping you down, because within 6 months, going from 75 to 81, that's really crappy outcome here. Okay, so there could be something that is preventing your credit score from going up. So if you don't look at it, if you don't actually get a copy of it, you will never know. So this is why we always advise our clients to monitor their credit regularly. When it comes to business credit score, unfortunately, you don't have a lot of free service out there, free services out there that will give you free access, if you will, to your credit report. So you're going to have to pay for it. But hey, listen, paying $40 a month or a quarter is really worth it. Okay, it is an investment. It is really an investment. And one thing I also want to say here is that don't just people tend to just mention like Paydex being the all dominant, the almighty business credit scores. I mean, Paydex is important. Don't get me wrong, but pay attention to the other two. Pay attention to what Equifax is doing. Equifax business is doing. Pay attention to what Experian business is doing. Okay, those are really important. This will help you again monitor your credit across the board. And there are other databases though where you can actually report your business credit score. You have a small business. So I'm actually blanking here, but SBFA. So small business financial SBFE, small business financial exchange, whereby you are able to see other kinds of business credit activity. Okay, so before I close to this conversation, I just want to say that when we talk about you building business credit without a personal guarantee, you need to understand that there is a typology when it comes to business trade credit, okay? And because it's not just because people think about business credit, people think automatically about credit cards and loans. Yes, those two are part of it, but you do have other players, other programs here. So you have vendor credit. So vendor credit is what you and I know, that's net 30 accounts. So you actually get set up as a net 30 vendor. So when you buy something from let's say from Newegg, for example, you basically, or you buy something from Costco online, your business that is, they will give you 45 days to pay it off. They'll give you 30 days to pay it off. So that's the classic definition of vendor credit. And then you have retail credit. So retail credit is issued by retailers to buy their products and services, and it's only good for the actual retailers issuing the credits, often credit cards, okay? And so this is really good. You also have fleet credit. So fleet credit comes from companies that issue credit for purchasing fuel and the repair and maintenance of vehicles. And often these are gas cars, and even businesses that don't have large fleets of vehicles can still benefit from fleet credit. You also have service credit. So service credit is issued by a service provider to pay for their services only, okay? And there may be time in business and or credit history or business revenue requirements. So if you cannot meet some or all of those criteria, you may be able to instead offer a personal guarantee or secure your credit with monetary deposits. And then finally, you have business credit cards, okay? Business credit cards. So those are payment cards issued by a vendor through or directly by a financial institution to users. Now, so those are the top 5, really. But let's not forget the loan part of things, because when we talk about building business credit without a personal guarantee, you can also use a business loan, a traditional business loan. You can use an invoice factoring arrangement. You can use, for example, other types of business loans. You can even use a business line of credit. So as long as the lender is reporting your transactional activity to the credit bureaus, you are good to go. And that's what you want. You want to beg the vendor to so that they can actually report your data, your good data, at least to all the credit bureaus, and so you can take time over time. Rather, you can over time improve your credit standing. You can improve your business credit standing. Okay, and with an improved business credit profile comes a constellation of benefits. You are able to access larger funding. You are able to actually have a larger insurance premium policy, insurance policy premiums. Okay, so this is really good. So it's really a win-win-win-win for everybody. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to build business credit without a personal guarantee. And so we had a conversation about how do you actually do it real fast, okay? And so the steps are: you want to incorporate your business, you want to get a strong foundation, you want to get all identification numbers, you want to get set up with the business credit reporting agencies, you want to keep business details similar everywhere, you want to apply for starter credit, and you want to monitor your credit regularly. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.